Good morning, good afternoon. So we'll be reviewing yesterday's price action. Yesterday's Tuesday's price action being the 23rd of April. Today is currently 24th of April. So for the dollar, we traded we traded up inside this liquidity void, which is resting here. And we noted last week that this is a high resistance liquidity one because there is back and forth price action here. So this is buy side liquidity which is resting here and also buy side liquidity here. So and on the weekly time frame, this is a mitigation block. So we expected for narrative to play out for price to have a range bound price action for the dollar going into this week and possibly next week. So we'll be ranging inside of this mitigation block while trying to get to this high. So for the 1 hour, as you can see, we traded to the discount of the range between this low to this high. We traded to the discount, this fair value gaps, which is resting here. This is a discount fair value gap here. And every PDR here above the 50% of the range is a premium price point. So we traded from a premium to a discount yesterday, and which is which we have previous weekly low resting here. So let's dive right into today's topic. So let's take all of this off. Starting from the weekly. So for the past 3 weeks, we've had lower prices. We've had price dropping lower. Yeah, yeah, and yeah, taking out sell side liquidity on the weekly time frame. While on the daily time frame, this is the swing, this is the range, this is the trading range for the daily time frame. And we dug down into a discount price point, which is this lows here, which is this sell side liquidity, which was resting here. So there was sell side liquidity resting below these lows here, resting below these lows. On Friday, the 19th of April, going into this week, um, we saw a shift in market sentiment, and this is what we want as smart money traders. We want we want to see a visible shift in narrative in buyers for uh, typically the uninformed money. So we want to see them switch their narrative from a bullish narrative to a bearish narrative because this drop in price now, they'll see this as price dropping lower and we're going lower down to 80s also. So that's by the way. So for yesterday's price action, yeah, we opened here inside of this BC. So I noted the group to check to note the low and the high of this fair value gap here, which was created on the 22nd of February. So this is the low, and this is the daily BC high. So for a BC is a buy side imbalance, sell side inefficiency. So we've offered buy side delivery in price. So price is lacking in sell side delivery. So we're expecting, so we have that here, price delivered sell side liquidity here, making, so for this to be a balanced price range, we need price to trade back up inside of this daily BC to at least 50% of the BC and to the high. And also, if you can see here, we also have an imbalance which was created on the 15th of April. So, so what price does typically is goes trades to a pool of liquidity or tries to balance an imbalance, or price tries to balance an imbalance, which we did here after trading inside a pool of liquidity. After trading into a pool of liquidity, then add a reversal back inside of uh, trying to balance this inefficiency which was created here. So just let's go to the 15-minute time frame straight up. So this was yesterday's business from. So this is the midnight opening price for yesterday. So we had an extremely bullish day yesterday. So we had an extremely bullish price yesterday, join up to this buy side liquidity here, which was resting here, and this daily BC high. So we had buy side resting above here. So typically we expect price to trade to and show the pool of liquidity. So because we're expecting higher prices from the narrative which was developed from the daily time frame. Every time price drops, we want to see that as a manipulation leg to take price higher. Like we want to see that as a retrenchment, trying to take price to for higher prices. So the drawn liquidity for yesterday's price action was this daily BC high. And going down to the 5 minutes time frame, typical trading window for this for the group is 10 a.m. to 11 a.m. Window. As if you're trading the indices market. So this was 10 a.m. opening price. So this is 10 a.m. and this is the 11 a.m. trading window. So for the 5 minute time frame, we have this imbalance here. There was nothing here on the 5 minute. There was no imbalance here on the 5 minutes to work with. But here we had the imbalance here, which was created here. So because we're expecting higher prices, we expect price to trade back at the future time in price, at the near time in price, down inside of this imbalance to fill this imbalance to take price higher. And we had that here on the 5 minute time frame. So this was the 5 minute imbalance high. Let's see, 5 minutes fair value gap high. And this was the low of it. So during the kill zone, so during the trading window, the kill zone for the ES, our trading window was from 10 a.m. to 11 a.m. Typically for the indices market, it opens at 9:30 a.m. at 9:30 a.m. and the morning session closes by 12 at 9:30 a.m., which is the opening bell. But the opening window for morning time frame is from the 8:30 a.m. to the 9:30 a.m. to 12 a.m., which is the window for the opening for the morning session. So if you're trading the morning session, you want to pick a time between 8:30 a.m. to 12 p.m. So for yesterday's trading, we had a news event, an high impact news, a high impact news at 9:45 a.m. So which caused this expansion leg higher. So when we have an expansion leg higher, we typically expect a retracement back of inside an imbalance which was created with that expansion leg, or a retracement to another block which we had here. So when we had this expansion here leg higher through buy side liquidity, we expected price to come down to the bullish order block, which will be paramount to take price to the joint liquidity for the day, which is the daily BC high of that daily BC from the daily time frame. So we had that here. So during the 10 a.m. to 11 a.m. trading window, we saw this imbalance here. So as you can see, there's an imbalance here, which is this. That's the high of the imbalance, and this right here is the low of the imbalance. So if you miss this imbalance here, which was created here, there is still time to enter into to look for. There's You're still inside of your trading queue zone if you're trading the morning time frame, the morning session. There is still time. So when price trades inside of this fair value gap here, you take your buy here, targeting this joint liquidity here, which is the daily BC high. So if you miss this daily BC, if you miss this fair value gap here, when price traded up back above this high here, this was a shift in market structure. This is a shift in market structure. So we had higher prices, and price left this bullish order block here. So you want to mark out the high to the low of the bullish order block, which is here. This is the bullish order block which was created here, which was left here. So after price traded back down into the bullish order block, which has this bullish proportion block resting here. So when we had that price action here, price valid higher and left an imbalance here, left this imbalance here. At this time in price, we will note this imbalance here. We note it as as something of interest. So if we are to have a retracement in price action, price should retrace back down inside of this imbalance here. So if we are to have a retracement back after price value is higher, if we are to have a retracement back, we should have a retracement to this fair value gap here, which as you can see is the it's below equilibrium from this range. Let's use the bodies from this low to this high. So you mark that out as a discount PDR because you want to buy at a discount price. So your limit order would be above this, will be at the high of this 1 minute fair value gap here, and your stop loss below this should be below this swing low here. Why? Because you have this fair value gap here, which is the first PDRA, and you also have this bullish order block, this set of last down close candle before this move higher. You have this bullish order block, and you also have this breakaway gap, and you do not expect this breakaway gap to be filled because when a breakaway gap is created in price action, you see that as price being one-sided, being energetic to and eager to move in a one-sided direction. So which is what this breakaway gap um, signifies here. So we expected price to retrace back down inside of this fair value gap here, which was resting here. So that will be the entry for the trading window. And you want to, if you're trading the money time frame, it's advisable to, if your entry does not form the from 8:30 opening price to from 8:30 opening time to 11 a.m. opening time. If you do not see an entry, it is better to kill that trade idea because typically when the PDRA forms after 11 a.m. to 12 a.m., it is mostly of low probability. It is most times of lower probability. So because we had this fair value gap here, which was formed inside of the trading window, inside of the Q zone. So this right here is our Q zone. So we have our Q zone here. So this is our Q zone for the 10 a.m. to 11 a.m. window. So your buy limit should be resting here. And one thing about Q zones, you do not have to enter in a Q zone. So if your PDRA you're trying to trade formed inside of the Q zone, you can just place your limit order on the PDRA and your stops where you want it to reside and leave it. Price can still trade back down inside of it during the during after your Q zone has ended, which it did here. So as you can see, we left this after we took out this high, we came back down to take out this low. So this right here, liquidity was swept to the upside and it was purged on the downside. So we want to see this when the liquidity is purged on the downside. When the liquidity is purged on the downside, we want to buy every low, every price point below this low here. We want to buy everything. So we want to buy every low below this low here, which also coincides with this fair value gap here, which with this 5 minute with this 1 minute fair value gap here. So we are the value higher, targeting this daily BC high, which is about 20 plus points. So for the afternoon session, the launch hour for the indices market is from 12 p.m. to 1 p.m. During this time, price will be taking a lunch break. Let's use that term. So this is a non-tradable window of price action. If you're an experienced trader, then you can venture into trading the lunch session. But if you are just a beginner, you've been trading below 5 years, anything below 5 years, you're a beginner trader. So this is the launch window here, which is a non-tradable time for us here. When the afternoon session begins here, we had price leave buy side liquidity because we have now reached our join liquidity, because we have now reached our draw on liquidity, which is here. So because we haven't reached the draw on liquidity for the day, we expect price to hold sell side, which will be offloaded, which will queue in smart money buy entries, which will be offloaded at the join liquidity or close to join liquidity. After we purge sell side liquidity here, after we had the sell side liquidity purge here, price valid higher and let a fair value gap here and also a fair value gap here, which will be of interest. So we had a fair value gap here, which was created, which was left here. So we expect price to retrace back down inside of that fair value gap to rally higher to our daily objective, to our join liquidity from the daily time frame. So you want to place your buy orders at the eye of the fair value gap here, and your stops should be below this candle, below this candle's low, or if you are more conservative, you can make your stop below, you can place your stop below this swing low here, which was created here. But typically I place my stop at the candle that make the fair value gap, the candle that starts the rally higher to make the fair value gap. So as you can see, we had price trading inside of this fair value gap here multiple times. Traded back inside of this fair value gap here, we rallied higher, but because we have not reached our daily objective, price traded back down inside of this fair value gap again multiple times. So we had price trading back down inside of it here and here. So once we had price trade back inside of here, which is around the close of the day, So you should be, if your joint liquidity has not been met, you can either collapse the trade totally, or you take out partial and leave something running. So for the afternoon, we demoed the afternoon session. We traded the afternoon session. So for the afternoon session, we bought when price was trading down inside of this candle here. So as you can see, the high of the fair value gap here was our entry, which is 5067.8. So which was the high of this fair value gap. So we bought the high of the fair value gap, and our stop loss was resting below the candles low that created that fair value gap, and we exited close to the daily BC high. And as you can see, when price opened for the new day opening price, as you can see, we had price trading higher, going for higher prices. The Q zone for the afternoon session starts from 1 p.m. to 4 p.m. So that is the Q zone if you're trading the afternoon session. Alright, that's all for the trade review and Q zones. So I hope you got something from this video. Thanks for watching. Have a great day. Good luck trading.